Hello and a very warm welcome to all the viewers of 3TV. I am Manoj Dara.
And I am Ruchi Sharma. So Manoj, we spoke to a lot of market participants and analysts, and let's see what they have opined. They have made some predictions.
The top blockchain predictions for the 2023.
Yes.
Let's get started. But before we move ahead in the future, think back 1 year ago when Bitcoin traded at around $50,000, you couldn't watch sports without seeing a crypto advertisement.
Yes.
And you couldn't get rich, or at least it felt the way, by minting a non-fungible tokens of your kidney stones. You have extensively covered this sector.
Actually, at the time, who could have predicted the collapse of Celsius Network and Voyager Digital, or that Matt Damon would become a crypto punchline, or that the space golden child, Sam Bankman-Fried, would turn from Nayak to Khalnayak?
Exactly. This is all a preamble to say that there is no crystal balls. Predictions are often wrong. Trends can change on a dime. But then again, perhaps after the FTX flavored gloom of the last 2 months, speculating on 2023 is exactly what we are not going to do. But we have bring for our viewers what market participants think will happen in 2023. So let's get started, Ruchi.
Yes, indeed. So without wasting any time, let's discuss what the outlook for blockchain and digital assets will look like in 2023.
It is expected that more business will explore blockchain solutions in 2023. That is actually blockchain-based technology is something which is gaining a lot of traction as far as we have seen the market broadly collapse, but the underlying technology is still robust, and there are a lot of expectations in 2023 as well.
Right. So according to a survey, 81 of top 100 companies are using blockchain technology, and 40% of top companies have already adopted blockchain, the underlying technology behind cryptocurrencies.
Exactly. The cloud-based solutions are now the default for many businesses. But there are many challenges for the cybersecurities as far as the cybersecurity concerned.
Right.
There are we have witnessed a lot of hacks in this space in 2022. But the blockchain technology, which is actually a decentralized yet secure by its nature, so it offers an important alternative when traditional database technologies cannot provide enough security, trust, and transparency for a cloud-based solution.
From private sector to world governments, everyone is adopting blockchain. So it's safe to say blockchain technology is here to stay. So if business across the world want to hop on the future wagon of development, then they would have to adopt the cutting edge of blockchain technology.
But analysts Ruchi have believed, or they opined, that the use of dApps and Web3 will spread more than ever. This is what the second predictions for the 2023
Right.
is.
So businesses can take advantage of dApps providers that offer solutions or capabilities with APIs that enable larger solutions to achieve the reliability and trust of decentralized applications.
So this can be especially important when business develop new proprietary solutions that need to be tapped in the decentralized capabilities.
Decentralized finance will continue towards revolutionizing financial services in 2023.
But you must have, we have extensively covered this episode of Celsius. Post Celsius, the DeFi segment has witnessed a collapse.
Right.
And the higher yields era is actually gone. And now they have come to a conclusion that 2023 will look forward as this space is concerned.
Right.
But only time will tell that how DeFi space is going to react. But for the next year, more meaningful Web3 social platforms and protocol will foresee growth in interoperability, identity, on-chain social graphs, and crypto abstract social experiences. That is what the market participants have expected.
Right. Moreover, fashion will continue to lead the way when it comes to Web3 adoption. We will see further collaborations between Web3 personalities and consumer and luxury brands that want to explore new commerce models and customer touchpoints. And we have actually seen a lot of brands,
entering into the NFT space or the metaverse.
And the metaverse, right.
Exactly. With the rise of generative artificial intelligence, we might see blockchain play a significant role in helping us to distinguish between the content created by artificial intelligence and content created by humans. Of course, there is no match as far as the artificial intelligence is concerned, but they require human touch.
Of course. There has to be human brain behind that.
Exactly, yeah. Let's move on to our third prediction.
Right. So market predicts in 2023 that cryptocurrencies will see more regulations.
That is actually the need of the hour. India, as we speak, that it is the G20, which is actually a big forum. They are advocating looking to regulate cryptocurrencies because of primarily the three concerns. One is terror financing, human trafficking, and drug. I mean, the route in which they are using this is actually not acceptable as far as India is concerned.
Criminal activities, right?
As recent failures are expected to drive the development of regulations and oversight in 2023, there are hopes that a clear framework and safeguards will re-establish trust in platforms, and the flow between fiat and the digital currencies will become more commonplace and effortless.
We will see an increase in cryptocurrency guidance and regulation from regulatory agencies across the world.
Indeed, you're talking about regulations, but there is a lot of traction NFTs and metaverse have got. I mean, we have seen 2021 the era of the rise of metaverse and NFTs,
right.
But we have seen the volumes come off highs broadly because of market making activity which these were indulged in. But as we say that, when the tide comes off, they will come to know that who is swimming naked. And this is something the metaverse, virtual reality and augmented reality and Web3 will foster use cases that could motivate businesses to engage with cryptocurrencies. That is what the need of the hour is.
Right. So moving on, our fourth expectation for 2023 is that asset tokenization will become more practical.
I mean, this is something which is tokenization is something, and blockchain technology, if put in place correctly, that will create wonders. And blockchain technology can be used to create a secure and unique digital asset or token that is representation of value.
Right.
We have seen a lot of Indian companies. I mean, we have seen this Mumbai Indians. The recently, they have adopted. This is for the first time Mumbai Indians have taken this route in this IPL, and let's see how it works.
Right. So this allows the tokenization of assets that previously did not permit fractional ownership. Securities can be bought, sold, and settled faster. In fact, I did speak to a sports-based NFT marketplace, and they are also into this fractional ownership. And I think it is actually a very big attraction for fans, sports fans.
Yeah, of course, there is actually a means and measure to connect to your fans. Fans requires engagement with their clubs, and there is something that will take them closer to their favorite maybe franchisee teams, or maybe teams or clubs. So if we're talking about teams, so real estate and other assets have fractionalized ownership, which asset classes that were not suitable to fractionalization before.
And now, last but not the least, the fifth point that the analysts have highlighted is 2023 is less optimistic and more realistic. Next year, we will see more bleeding, more losses, and more pain.
I mean, that's what the ripple effect is. I mean, you have seen 2022 collapse, Terra Luna collapse, and then we have seen a larger
the entire year.
Exactly, FTX, and we have followed the collapse of NFTs. The volumes has dropped, and there is a broad concern as far as the market outlook is. You have seen volumes come up. Bitcoin was trading close to $16,000. Right. There were a lot many other cryptocurrencies who have lost roughly around 80-81% of their top. I mean, you're talking about the top 100 cryptocurrencies. They have lost roughly around 80% of their value. Right. And this analysts believe that this contagion impact is going to continue in 2022 for at least for the first half. But we have always been advising our investors that cryptocurrency markets are highly volatile. Consult your financial advisor before making any investment. So the contagion isn't over, and companies, banks, and funds are desperately hoping that the market moves past the FTX and Alameda collapse.
But whether people like it or not, you can't wish away a credit crunch and exposure to bad counterparties.
Yes, of course, yes. We see that the closure of funds and the faltering of companies we didn't expect, mostly simply due to the fact that the contagion was too vast and too difficult for us to all quantify the quantum of loss which has actually happened for the entire crypto ecosystem.
Yes, and we have learned from these incidents also.
Of course, yes.
So, having said that, we all hope that 2023 proves to be a bullish year, making everyone healthy, wealthy, and whole.
Well, that's all there is in today's special segment. We will meet again with the interesting updates from the crypto world. Till then, keep watching 3.0 This is Manoj Zara signing off.
Please like and share our video, subscribe to our channel, and press the bell icon to get instant updates. This is me, Ruchi Sharma, signing off. Have a great day.
Thank you.